The real estate market is a complex and ever-changing landscape influenced by various factors, including economic conditions, demographic trends, and advancements in technology. Understanding these trends is crucial for both buyers and renters to make informed decisions. In many parts of the world, housing prices have been on an upward trajectory over the past decade. This increase can be attributed to several factors. Urban areas, in particular, have experienced significant population growth without a corresponding increase in housing supply. This imbalance drives up prices as more people compete for a limited number of homes. In cities like San Francisco and New York, the influx of tech workers has pushed housing prices to record highs. Limited land and stringent zoning laws have further constrained new housing developments. Low interest rates have made borrowing cheaper, encouraging more people to buy homes. While this can stimulate economic growth, it also increases demand for housing, leading to higher prices. After the 2008 financial crisis, many central banks lowered interest rates to spur economic recovery. This policy led to a boom in real estate markets globally as more people took advantage of cheaper loans. Real estate has become a popular investment vehicle, particularly in regions with volatile financial markets. Investors seeking stable returns often turn to property, further driving up prices. In cities like London and Vancouver, foreign investors have bought properties as a way to secure their wealth, contributing to rising housing costs. The dynamics of the rental market are closely tied to the trends in housing prices. As homeownership becomes less affordable, more people turn to renting, increasing demand and driving up rental costs. High housing prices push potential buyers into the rental market. This trend is particularly evident among younger generations, who often delay homeownership due to financial constraints, student debt, or a desire for mobility. In cities like Berlin and Sydney, the younger population, particularly millennials and Gen Z, prefer renting over buying due to the high initial costs associated with homeownership and a lifestyle that values flexibility. Some cities implement rent control to keep housing affordable. While well-intentioned, these policies can sometimes lead to unintended consequences, such as reduced investment in rental properties and maintenance issues. In cities like New York and San Francisco, rent control policies help keep rents affordable for existing tenants. However, these controls can discourage new investment and reduce the quality and quantity of available rental housing over time. The rise of platforms like Airbnb has transformed the rental market, making it more lucrative for property owners to offer short-term rentals to tourists rather than long-term leases to residents. This shift can reduce the availability of long-term rental housing and drive up prices. In tourist-heavy cities like Barcelona and Paris, the proliferation of short-term rentals has led to regulations aimed at curbing their growth to protect long-term housing availability. Government policies significantly influence the real estate market, impacting everything from affordability to availability. Here are some key policy areas and their effects. Central banks influence housing affordability through interest rate policies. Lower rates reduce mortgage costs, making home buying more accessible, but also driving up demand and prices. Homebuyers should monitor interest rate trends and consider locking in mortgage rates when they are low to secure better financing terms. Zoning and land use regulations determine where and how housing can be built. Easing zoning restrictions can increase housing supply and help stabilize prices. Cities like Tokyo have relaxed zoning laws to encourage high-density developments, resulting in a more balanced housing market compared to cities with stringent regulations. Investors and developers should stay informed about local zoning changes, which can create opportunities for new developments. Governments often provide subsidies or tax breaks to encourage homeownership and affordable housing development. Programs like the First-Time Homebuyer Credit in the United States provide financial assistance to new homebuyers, making it easier for them to enter the market. Prospective buyers should explore available subsidies and tax incentives that can reduce the financial burden of purchasing a home. Governments may fund or mandate the construction of affordable housing units to ensure that lower-income households have access to safe, affordable homes. Singapore's Housing Development Board, HDB, provides affordable public housing to a significant portion of its population, ensuring broad access to housing. Renters and buyers in search of affordable options should investigate local affordable housing programs and eligibility criteria. Technological advancements, collectively known as PropTech, property technology, are revolutionizing the real estate industry. Here are some key innovations. Virtual and augmented reality enable virtual tours of properties, allowing potential buyers and renters to view homes without physically being there. Real estate companies like Zillow and Redfin offer virtual tours, which became particularly popular during the COVID-19 pandemic. Use virtual tours to narrow down property choices before scheduling physical visits, saving time and effort. Blockchain can streamline real estate transactions, making them more secure and transparent. It can also facilitate smart contracts that automatically execute when conditions are met. Companies like PropTech are using blockchain to conduct real estate transactions, reducing the risk of fraud and lowering transaction costs. Stay informed about blockchain developments in real estate to benefit from more efficient and secure transactions in the future. Data analytics can provide insights into market trends, property values, and investment opportunities. Advanced algorithms analyze vast amounts of data to help stakeholders make informed decisions. Platforms like CoreLogic and RealIce offer data analytics services to help investors and real estate professionals understand market dynamics and property valuations. Leverage data analytics tools to gain a competitive edge in the real estate market by identifying trends and making data-driven decisions. IoT devices can enhance property management and tenant experience by enabling smart home features like automated lighting, heating, and security systems. Smart thermostats like Nest and security systems like Ring provide convenience and efficiency, appealing to tech-savvy tenants and buyers. Consider investing in smart home technologies to increase property value and attract modern buyers and renters.